This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers. Happy New Year and welcome to the first DCA Wednesday episode of 2024. We have an exciting year of stacking ahead of each other, and hopefully this will be just one of many DCA Wednesday episodes as we continue to grow that stack together for at least as long as someone is willing to sell us their precious Bitcoin. Today is also the 15th anniversary of the Bitcoin Genesis block. Many people consider that Bitcoin's birthday. Others consider White Paper Day to be Bitcoin's birthday. But nonetheless, Bitcoin has been live for 15 years. It is also Proof of Keys Day, which is something we'll get into a little bit more after the news. And speaking of news, I really want to thank the troll who tanked the price of Bitcoin this morning with the unsubstantiated report that the SEC was going to announce they were denying all the spot Bitcoin ETFs. Like so many, I have mixed feelings about the ETFs, and if you're a regular listener, you've heard me express them many times, but I do find it hard to believe that approving the ETFs would not be like pouring gasoline, or in this case, rocket fuel on the fire. With the halving now less than 4 months away, it really feels like we are set up for the perfect storm. And I say that as someone who's always been skeptical of the "this time is different" narratives, because I've been through enough cycles now that I can remember hearing "this time is different" every single one of them, even including as far back as, the 2016 halving, when the narrative was this was going to be the super cycle. There were going to be no more cycles. It was going to be the cycle to end all cycles. So we didn't see that play out. Rhyming remarkably close to 2019, 2023 began as the year of the crab market, but definitely ended full of excitement and optimism. According to CoinMarketCap, Bitcoin started 2023 at a price of $16,547 and ended the year at $42,265, almost 3x from what hopefully turned out to be the cycle low. Is looking like it's going to be the cycle low unless we have another black swan event right before the halving, and that has happened before, as I've mentioned multiple times. The previous cycles, actually, we saw a pretty good sell-off a month or two before the halving. Of course, last cycle it was because of the thing that all the non-essential workers were forced to stay home. The economy was shut down. That was clearly a black swan. But it just seems like it's funny how we tend to have a black swan every cycle. And maybe if the ETFs really did get denied, that'll be the black swan. But I think we've already seen that card played, even though the reports are looking like they're going to be unsubstantiated. And while it did tank the price of Bitcoin, it was certainly nowhere near hard enough to set a new cycle low, for example. At the time of this recording, we are sitting at a Bitcoin price of $42,890 or 2,332 sats per dollar. And the current block height is 824,234, which puts us a mere 15,766 blocks away from the next Bitcoin halving, the minor reward halving. As you know, that occurs every 210,000 blocks. And in this case, it's looking like that's going to occur approximately on April 19th. We don't know exactly when it's going to occur because, we know it will occur exactly at block 840,000, but depending on how slow or how fast blocks are found, on average, that could be anywhere between the beginning of April or even as late as May. But most estimates now are looking like it's going to be around April 19th. And as we get closer, that's looking more and more likely. Before we get into all that, though, let's get back into the vital statistics. I kind of got a little ahead of myself because we were talking about the year-end price, and that led right into price, which led into the statistics. Bitcoin's current price, despite the big sell-off, is pretty much, it's a little bit lower than we were last DCA Wednesday. Last DCA Wednesday, Bitcoin was valued at 43,365 or 2,306 sats per dollar. So less than 30 sats per dollar less. We're going to receive. That's the good thing. just a little under 30 sats per dollar more for our US dollar conversion today when we get around to stacking that filthy fiat. And that's awesome because I really thought we would probably never stack below 45,000 ever again. But who knows? I don't have a crystal ball, and Bitcoin could do anything price-wise, even in just this short amount of time that we're going to be talking before we go ahead and make that stack. For those of you paying attention, Bitcoin's market capitalization is down about $10 billion because of the price dip, currently ringing in at a market cap of $839.8 billion. That's still pretty darn high. That's only where we were back on December 13th for our DCA Wednesday stack. So pretty much in line with where we've been all of December, despite the fact that there's been a dip. Of course, the last several DCA Wednesdays in a row, we'd always had a dip, like Sunday, Monday, Tuesday, and the price had recovered just in time for our DCA Wednesday stack. So we're still trending up and to the right when you zoom out. And that's the neat thing about our DCA Wednesday series, our dollar cost average Wednesday series. Instead of staring at the price every day, like a lot of people tend to, and some podcasts even do, we only really look at the price once a week. And that definitely has smoothed things out quite a bit. Although it definitely can still see that up and to the right trend. And boy, howdy, because 2023's been a good year for Bitcoin, especially if you take it from a frame of reference of that cycle low around $16,000. For those of you who still value your wealth in shiny yellow rocks, Bitcoin, despite the fact it's dropped in US dollar terms, will still cost you 21.3 ounces of gold to purchase just one Bitcoin, exactly the same as last week. A little bit cheaper for you gold bugs because of the dump this morning. So be warned, as I mentioned in many podcasts, including last podcast, I believe that by the end of 2024, we're going to be talking about Bitcoin in terms of, we're going to be using the reference of pounds of gold per Bitcoin, not ounces of gold per Bitcoin. We're already over a pound of gold per Bitcoin, but at 21.3 ounces of gold, we're still in that refer to it in ounces of gold, 21.3 1 ounce gold coins per Bitcoin. But you know, you get Bitcoin at the price you deserve. And for Peter Schiff, it's going to be a heck of a lot more than 21.3 ounces of gold if he ever gets on board, unless he's just trolling us and he's already got a fat stack. I'm not a person in the Peter Schiff camp that believes he know that he's just fibbing, that he really has a fat stack. I really think he's that twisted. You know, his dad was kind of a really renegade libertarian, died in prison, and I think he's got daddy issues more so than just being crafty. I mean, he is smart. He did see, the 2028 financial crisis coming, etc. But I think his gold fixation has got a lot to do with his daddy issues more than an actual hatred for Bitcoin. But I digress. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 2,397 large pepperoni pizzas from Papa John's. That is more than a pizza once a day for more than 6.5 years. Not quite as many pizzas as last week because of the dip, but that's a metric that's going to be really weird when we get like the pizza flippening. Instead of Laszlo paying 10,000 Bitcoin for 2 pizzas, when it's 10,000 pizzas for 1 Bitcoin, I think that'll be the official pizza flippening. I don't like the term flippening, and I don't like the term halvening. I say Bitcoin halving. If you say halvening, whatever you choose, but I just use the term flippening, and I caught myself thinking, I really don't like that term. But nonetheless, I do anticipate the day when we have the quote-unquote pizza flippening, and we can purchase more than 10,000 pizzas per 1 Bitcoin. And that looks like it's coming faster than you might think. TikTok next block, up and to the right. Regardless of where Bitcoin tops out this cycle, it's going to be a lot more than 2,397 pizzas for Bitcoin. That is for sure. The mempool is looking completely jammed up again. Those orders and inscriptions just will not go away or have not gone away. I listened to a podcast where they were talking about this situation just the other day, and he was kind of alluding to the fact that there might be some big money attacking Bitcoin with ordinals on purpose. And if that's the case, they had up to maybe $8 billion to spend in fees, which ultimately is a good thing if you're a miner, because we'll take that $8 billion. And then when you run out, ordinals can be relegated to the CryptoKitty dustbin, and miners will just be a lot richer. But in the meantime, there are approximately 102 blocks worth of transactions pending in Clark Moody's mempool. That is a whopping increase from last week when there were only 39 blocks of transactions in Clark Moody's mempool. I'm scrolling all the way through my notes and I don't find a single day on the last year or two when we had more than 100 blocks pending. Maybe he changed his algorithm a little bit, his mempool space size, because there's a little bit of controversy, especially if you listen to Marty Bent and Rabbit Hole Recap, where they mention that mempool.space shows a lot more transactions pending than Clark Moody's does. And that's because mempools have a default size, and after they fill up, they just won't allow any more transactions, or they'll start purging transactions. And mempool.space has a larger mempool, but we had always been using Clark Moody's mempool because before ordinals and inscriptions, it wasn't a problem. We never really got to the point where it made a difference. And now, even though that it has made a difference, for the purposes of consistency, I still like to reference Clark Moody's dashboard. Maybe he made a tweak, which will make that all moot. Although I think so, because it's still quite a big difference between him and mempool.space. And speaking of on-chain activity, Clark Moody's fee estimator says that because of all those transactions, it will cost you a fee of 231 sats per VByte to guarantee your Bitcoin block or your Bitcoin transaction is included in the next block. That is actually down from last week when they were recommending 396 sats per VByte. Mempool.space is telling a very similar story as far as trending downward and fees trending downward. They are significantly cheaper. Their fee is significantly cheaper than the fee that Clark Moody's fee estimator is recommending. Mempool.space's fee estimator says if you want to guarantee a high priority transaction is mined right away, that you need to include a fee of 57 sats per VByte, which works out to about $3.42 and is about 1/3 of what they were recommending last week. So that's a big drop off. They are recommending that if you have a medium, low, or no priority transaction, you should be including a fee of 54, 52, or 44 sats per VByte accordingly. Whereas Clark Moody's dashboard says that a 6 sat per VByte transaction will still be mined within a week. I don't think I've actually ever seen that happen recently. If you're looking at the very last block, the block that rolled in right before we started recording, block 824,234, its fee span was anywhere from 55 sats per VByte all the way up to 1,005 sats per VByte with an average fee of 68 sats per VByte. So if you have an on-chain transaction you have to make and it needs to get confirmed right away, you'll probably want to take a look at mempool.space or Clark Moody's dashboard or wherever you get your data and make sure you have the most up-to-date fee estimates if you can't afford to wait. If you can't afford to wait, of course, fortunately, there are things like replace by fee or child's pays for parent that will allow you to bump that fee up if you lowball it and your transaction doesn't get mined right away. But I personally would feel comfortable sending a 65 sat per VByte transaction right now because those have been clearing relatively consistently looking back through the Block Explorer. All right. That metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate is down. Bitcoin's currently averaging 5.81 transactions per second. Last week we were averaging 6.87 transactions per second. And again, this isn't any kind of official metric that I know of that anybody else has been espousing. It's just something I've noticed by giving the stats every Wednesday when we do our DCA Wednesday episodes, that every time transaction rate has been surging, that corresponded to the price going up. And when the transaction volume was trending down, so was the price. And that holds true today because there's more than one transaction per second fewer on average right now on chain, and the Bitcoin price has trended down today. So that metric still holds. Who knows whether that will be the case, but for the meantime, we're going to keep studying that metric because I do find it interesting. At least they don't say, they say that correlation is not causation. They might not have anything to do with each other, but we've been doing this podcast for more than 2 years. And I don't think, pretty much without exception, we've seen that rule broken yet. So even with the ordinals and inscriptions completely bloating the on-chain transaction metric, because before Taproot, before ordinals inscriptions, you'd never really see more than 4 transactions per second max. And then we've seen, as high as 7 or 8 transactions per second after that, because the BRC20 token minting and the ordinals and inscription transactions are all they're not necessarily very small, but their data mostly takes up the signature of the header of the transaction, which allows them to be cheap because SegWit split that block weight to where that portion of the transaction only paid about 0.25% of the fee that that the meat of the transaction pays. And that's part of the reason why so many people are upset about orders and descriptions, because they're jamming the blockchain full of data and paying a super discounted rate to do so. We have not had a Bitcoin mining difficulty adjustment since we last spoke. We are on track to have one in about 2 days. Looks like it's going to be on January 5th. It's it's exactly 310 blocks from now. And it's looking like it's going to be a moderate difficulty increase. It had been looking like it was going to be a decrease for a while. And then last Wednesday, it was looking like we were going to have about a 0.7 to 1.7% difficulty increase. And that's holding, because depending where you get your data, we're looking at an increase of anywhere from 0.6 to 1.7% in difficulty. The difficulty, the hash rate, the difficulty, computing difficulty to find the next Bitcoin block. As you know, the Bitcoin protocol adjusts the difficulty it takes to mine a Bitcoin every 210,000 blocks. That's the halving, every 2016 blocks, which theoretically works out to about every 2 weeks, with the goal of finding one new block every 10 minutes. And currently, blocks are averaging 9 minutes and 57 seconds, which is why we're looking at a small difficulty increase. The idea being that that would bring the transaction time up to 10 minutes and 0 seconds on average. We tend to seesaw above and beyond that average. You very rarely see exactly 10 minutes on average during a difficulty epoch. But, that's because it's an average. And that's why they average it out over 2016 blocks, because the more data you get, the more likely your average is to be that you will be the average will be on average. For example, and I'm stumbling over my words today. It's been a long day, plebs. It's been in some ways a very good day. Started the day out on the beach watching a rocket launch. In fact, if you're listening from Sweden and you're doing so by I don't know how to pronounce the company, Ovzon or Ovzon, OVZON. They're a broadband internet satellite provider in Sweden, or based in Sweden, and they launched the Ovzon 3 satellite tonight. So perhaps you'll be listening to the Bitcoin Bulletin podcast or communicating over the satellite I just watched launch today. And because it was a SpaceX launch, that booster returned back to Cape Canaveral and landed. That's always super cool too, because the landing zone is a lot closer to where I watch on the beach than the launch pad is. And you get that double sonic boom when the rocket does when it fires up its landing burn. It's still going supersonic. So right before touchdown, they break the sound barrier, and it takes a little while because speed of sound travels about 700 miles an hour or so, depending where you're at, depending on the air density, and we're 3 or 4 miles away from the landing zone. So a couple seconds later, you get that boom, 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 and it's or depending on how many boosters are landing. The really cool thing about SpaceX is when they launch a heavy, you get 2 sets of double sonic booms, and we had that just the other day. So for us space nerds, it's been a great week to be living here on the space coast of Florida. And I'm getting way off track. So we just went over mining difficulty, and now we're at the point in the podcast where I want to talk a little bit of business on air. Before I do so, I want to thank those of you who listen on your favorite Podcasting 2.0 apps, such as Fountain. Listening via Podcasting 2.0 lets you help support your favorite podcasts via the value for value model, where you can stream sats on a per minute basis, or send a boost, which is a lightning message where you can basically send a shout out, and because it's a lightning transaction, you're sending some sats as well. Speaking of Fountain, it was reported to me that last week's episode was really horrible for some European Fountain listeners. Apparently there is some sort of bug with Fountain, at least with Fountain listeners in Europe, where it was clipping or compressing the audio, and the audio quality was just horrid. Thank you, Leggy, for helping me troubleshoot that. Leggy sent me a clip of what it sounded like, and it was very perplexing because I played the podcast back on Fountain here, and it played just fine for me. I played it on Apple Podcasts, and the podcast itself, the file is hosted on Spotify. I double-checked the original file. It was fine. In theory, regardless of where you're listening, they should be pulling my audio off of the RSS feed. So it should all be the same. The only thing that I guess we could figure out, because this has also affected other podcasts, is that Spotify had some sort of code in it that's trying to clean up audio. And whatever the cause was, it made last week's podcast potentially unlistenable. So if that was the case for you, I do apologize. Leggy did say they listened to the podcast on Google Podcasts, and it was just fine on Google Podcasts. And speaking of Leggy also sent us a boost this week, and that's really flattering, considering that Leggy was doing us double time favors by helping us troubleshoot this, and that had to put up with such horrible podcast audio quality. So Leggy sent 3,000 sats and says, "I hope Fountain fixes the audio problem. I'm told there are only 3 guys. So it could take some time." Well, thank you for the boost, Leggy. Thank you for bringing this problem to my attention in the first place. Thank you for helping me troubleshoot it. I was having a little hard time grokking exactly what the situation was, because it was like 3 o'clock in the morning, Florida time. I had been up working on something else and was just about ready to go to bed when I got a DM from Leggy. So thank you for the boost. Thank you for helping me troubleshoot that. Hopefully you're listening on Fountain tonight and that this podcast sounds normal and that they took care of whatever the problem is. If you're out there listening on Fountain and my voice is clipping or the audio just sounds completely like garbage, as much as I hate to say it, perhaps try listening on Apple Podcasts or Spotify, where this podcast is hosted, or another podcast provider of your choosing, and hopefully that will take care of the problem. But first and foremost, hopefully Spotify fixed whatever that issue was. Speaking of listeners, our geographic distribution of listeners has remained exactly the same. The top 10 countries remain as follows. Number 1 is the United States, so thank you to all my fellow Americans listening to this podcast. Number 2 remains Argentina, so muchos gracias, amigos, in Argentina. Number 3 remains Germany, so Dankeschön, mein Freunds in Deutschland. Number 4 remains Luxembourg, again, Dankeschön, mein Freunds in Luxembourg, or Morien, to those who speak Luxembourgish. Number 5 remains Canada, and while it's a crisp day on the beach here, it's about 17 degrees Celsius for those of you who use Celsius, which is not too terribly bad. It's not a nice sunny day, but it's not frigid cold either. And I imagine it's a lot worse in Canada or many of the countries where you may be listening. But thank you to those of you listening in the frozen white north. Number 6 remains Spain, so muchos gracias, amigos, in Spain. Number 7 remains Colombia, again, muchos gracias. Very flattering that we have so many Spanish-speaking countries out there, so many Spanish-speaking listeners amongst our audience. Number 8 remains Sweden. Number 9 remains the United Kingdom. And number 10 remains Singapore. So thank you to every one of you, regardless of where you're listening from. It is really, really cool, really flattering, really gratifying that you guys are scattered all over the world, that this is truly an international audience, which I guess isn't surprising because Bitcoin is truly international. But considering this is an English language podcast, and we have so many people from countries where English isn't the official or native language, that's really cool. So thank you from the bottom of my heart, and we hope you continue to keep listening. All right, to the news. As I mentioned in the intro, today is Bitcoin's 15th birthday. Again, many of you consider Bitcoin's birthday to be White Paper Day, but today is the 15th anniversary of the Genesis block, that block that Satoshi Nakamoto mined on January 3rd, 2009, with the embedded headline from the Times saying, "The Times, 3 January 2009, Chancellor on brink of second bailout for the banks," which is a reminder of exactly why he launched Bitcoin, because it was just in the wake of the 2008 financial crisis. The bank bailouts, the bank bailouts of 2008, not the never-ending bank bailouts that it seems like we keep experiencing and will probably experience until fiat is no longer a thing, or at least fractional reserve banking is no longer a thing. But in addition to being Bitcoin Genesis Block Day, today is also Proof of Keys Day. And Proof of Keys Day has kind of lost some of its meaning, because now the mantra is, of course, get your Bitcoin off exchanges. Never keep your Bitcoin on exchanges. But back in the day, it was not so much get your Bitcoin off exchanges. I mean, there was the whole not your keys, not your coin thing, but it was a lot more common that people just kept their keys on exchanges. And the worry then was proof of reserves, was that these exchanges don't necessarily have your Bitcoin, and you might be just one day away from getting them out doxxed or BlockFi'd more recently. And so the idea was this was to test the exchanges. It was almost like a coordinated bank run. And the idea was first proposed by Bitcoin OG, self-titled hodler of last resort, and former host of the Bitcoin Knowledge podcast, Trace Mayer. He created Proof of Keys Day in 2019 with the idea that not only should you be holding your keys, but that by having Bitcoiners remove their keys from exchanges all at once in a coordinated manner, it would dramatically demonstrate which exchanges actually had your Bitcoin and which didn't. The whole when the tide goes out, you see who's wearing a bathing suit and who's not thing. So-called proof of reserves. Of course, if you're new, if this is your first cycle, you might not have any idea who Trace Mayer is. And the fall of Trace Mayer was sudden and shocking. Bitcoin is one of those was one of those things where we tend to slay our heroes. They say never put people on a pedestal because it seems like every cycle we lose one. And Trace Mayer went completely radio silent after an unfortunate episode of S-Coinery where he was promoting, I think it was Mimble token, was it Grin? I don't remember what he was promoting. He was promoting a shitcoin, and he was doing it at Tonevase's Unconfiscatable conference of all places. At the time, the single biggest Bitcoin maxi, Bitcoin only conference that there was. And this led to him being called out and humiliated at the conference. They have something called the Scammy Awards, where they present, awards in humor to the biggest scammers in the crypto space. And in this case, he was in the audience, and and they called him out hard and in person, and we haven't heard from him since. Okay, back to present day. As is often the case, the price leads the news, and as I already mentioned, apparently false rumors that the SEC was posed to deny the Bitcoin spot ETFs led Bitcoin to drop from well over 45,000. In fact, it was a little over 45,500 to as low as about 40,600, but for rebounding, recovering somewhat to where we currently are. The headlines, there are multiple headlines out there in the media, but this one from Newsweek, for example, pretty much sums it all up. Crypto platform accused of blowing up Bitcoin. Cryptocurrency market participants denounced Thielen's report because his bearish outlook is in contrast to the bullish predictions that have been driving up Bitcoin's price over recent months. Since the start of the year, Bitcoin has risen more than 150%, bolstered by the widespread anticipation of an SEC approval for the Bitcoin ETF. The Street ran the headline, ETF analysts confident nothing to indicate anything but approval as Bitcoin price dips. So it was after the what was kind of like a bombshell accusation, people actually started digging in and going over the facts and looking at what is actually going on. And so the Street says, after a wild morning of liquidations, ETF rumors, and Bitcoin price action reiterated how central institutions how central institutions are for the near future of crypto, maybe placing a little bit too much emphasis on financial institutions and institutional money, because even though we saw the price of Bitcoin tank, it didn't break into the 30s. And maybe if we saw a real SEC announcement coming out and denying all the spot Bitcoin ETFs, we might dip as low as back into the 30s. Eventually, though, none of that will matter because we're just a couple of months away from the halving. Bitcoin will shake it off. Maybe that'll be just like in 2020 where everything crashed for about a day, but by June, Bitcoin was on its way to all-time record highs. Even the stock markets were recovering. So, as I'm saying, that the people that started looking into what's actually going on, it appears that this claim is completely baseless. Obviously, I don't know what the SEC is going to do, and I have mixed feelings on whether they should approve an ETF or not, whether the ETF will be good for Bitcoin in the long run or not. But that being said, it sure looks like they're on track to actually approve one this year. We've spoken about this on many occasions because I started out under the mindset that there was no way the SEC was going to approve a Bitcoin ETF, especially not this close to the halving, because it's in the government's best interest to kind of try and blunt this next bull run, because they know they can't kill Bitcoin, but if they can just knock the top off and keep it from 3, 4, 5xing, the new all-time high this cycle, that they can keep it from being as impactful as it is, to keep normies from adopting it, to delay the inevitable, to delay hyper-Bitcoinization. However, with events like CZ's plea bargain and Binance bending the knee to the SEC, and with Sam Bankman-Fried's prosecution clearing up a lot of the reasons that the SEC had for denying the spot spot Bitcoin ETF last time. Now out of the way, I was starting to think, okay, well, maybe it's starting to look more likely that they will actually approve an ETF. And I was still at a point where I could flip a coin, where I didn't, I definitely wouldn't call myself confident that they were going to approve the ETF. But as we get closer, and these companies that have these pending ETFs are running commercials, they're spending money to promote their ETFs, things that you wouldn't think they would do if they weren't very confident that the ETFs were going to be approved. And then today, the reports are that the SEC has been meeting with the different exchanges to finalize the last few details that need to be put in place before the ETFs would begin trading, something you don't think the SEC would be wasting their time doing if they intended to deny the ETFs. So, for example, Bitcoin Magazine, who's come under a lot of deserved scrutiny recently for some of their positions, especially when it comes to the taproot wizards and ordinals and inscriptions, etc. Their headline says, SEC to finalize comments on spot coin BTFs with stock exchanges today. Investing.com has a very similar headline with Bitcoin ETF. SEC meets exchanges for final talks. And finally, the optimistic headline from Bloomberg saying spot Bitcoin ETF is getting SEC approval no matter what. And actually that says it's quoting Bloomberg. It's not actually on Bloomberg. It says it's from Cryptopolitan on MSN.com. And they're quoting Bloomberg analyst Eric Balkanos, basically saying that this thing's coming and it's just a matter of time, and that time is sooner rather than later. And of course, while all that's going on, the U.S. national debt just topped $34 trillion. CNN running the headline, U.S. national debt hits record $34 trillion. The U.S. government's debt has topped $34 trillion for the first time, just weeks ahead of looming deadlines for Congress to agree to new federal funding plans. So maybe the SEC just knows that they can't delay the ETFs whether they want to deny them or not. Maybe it has something to do with a lawsuit that the SEC lost with Grayscale, or maybe they just know the time has come and they've delayed. We were first talking about Bitcoin ETFs in like 2016 with like Gemini, right, and the Winklevoss twins. So they've managed to delay this thing almost 10 years. So maybe they're just planning on throwing in the towel if they go ahead and approve it, or maybe it's all just smoke and mirrors because they know that bigger feces are about to hit the air oscillating devices, and also they know that they're going to need out of the SEC one of these days, and when they go into private business, they're going to want to work for companies like Fidelity and BlackRock, and these are the companies that are pushing these these ETFs. So a little bit of scratch my back, kind of feather their nest for the future, or it could just all be smoke and mirrors because there's a lot of other news that dropped today to kind of obscure the fact that the U.S. dollar continues to get weaker and weaker, that the country in general continues to get further and further in debt. It's going to get harder and harder to pay that off, if not impossible. So while, for example, the debt is fairly well related to Bitcoin because it's the antithesis of Bitcoin is the antithesis of fiat currency, the ultrasound hardest money ever known to man. I almost used another Ethereum speakism with ultrasound money, but it really is ultrasound money, regardless of the fact that, Vitalik tried to use that to rebrand Ethereum. However, not related to Bitcoin at all, but equally in the bread and circuses column is the release of the 87 people named in the lawsuit by Virginia Giuffre about when she sued Ghislaine Maxwell over Epstein Island, over what was going on with that debauchery. So the headlines all today are the list, names released. So there's a lot of smoke and mirrors out there, a lot of, hey, look over there. And if that isn't enough, in addition to the Epstein smoke and mirrors, all the other political drama that's going on, there are rumors posted on Twitter today that the DEA is poised to reclassify marijuana, potentially legalizing it at the federal level. Well, I know many of you are definitely in favor of that, with it officially being a presidential election year, however, and with the incumbent being pretty much the least popular president ever to face re-election, at least in modern times, and the economy balancing on the brink of recession. If this isn't a let them eat cake moment, then there never has been one. So the smoke and mirrors are out, the distractions are out in full force, and maybe part of that has to do with the SEC's pending decision on the Bitcoin ETFs. I guess that's all just speculation because I'm sure some people know, but I'm not one of them. And most people who tell you they know for sure, unless they're Gary Gensler or sit on the board of the Securities and Exchange Commission, don't really know. All right, so I mentioned this was going to be our first DCA Wednesday stack of 2024, and so it is. And if you've never listened to us before, welcome aboard. You might be asking what DCA is, and DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 128th stack. We started stacking every Wednesday back on July 28th, 2021. We're coming up on 3 years. So far, we've stacked 127 times, converting a total of 2,540 filthy US dollars into 8,633,159 sats. And we've done so at an average purchase price now of $29,421.44. So back to the meat and potatoes. Our equal portion is $20, and I chose $20 because I wanted to choose an amount that any of you listening, regardless of where you're listening from, should be able to come up with if you're planning on investing in Bitcoin. Oftentimes you hear people say on social media, am I too late? And I only have X number of dollars, whether it's 500 or 1,000. Sometimes it's like, I only have $10,000. Is it even worth it at this point? And so I chose $20 for equal portion because I wanted to show we're not too late. We're still going to be able to stack a meaningful stack of sats. And regardless of how much money that you have, that you've chosen that you want to convert into Bitcoin, it isn't too little. It will make a difference one day. And I think we've definitely proven that, because just $20 a week for a little over 2.5 years, we've amassed 8.6 million sats. And one day that will be more Satoshis than the average person in the world will be capable of purchasing at any price. If you take the fact that there will only ever be 21 million sats and divide that by the total population of the world. To grow that stack, as always, we've been using the handy dandy Cash App. I've had my beefs with Cash App. They are not a sponsor of the show. I still think they're the easiest way to stack Bitcoin. They did change their fee structure a couple weeks ago to something that had me a little upset. But despite the fact they charge one of the bigger fees at 2.25%, and despite the fact they also charge a spread on top of that, they still let us transfer money to our Cash App, convert that money to Bitcoin, and transfer that money out of Cash App into our hardware wallet immediately without any waiting periods. And they let us do the transfer for free. And as expensive as on-chain fees have been recently, especially when it comes to withdrawing from an exchange where they won't let you name the miner fee, they set it for you. So there's no set it at 6 sats per VByte and hope it goes. You pay whatever they say you're going to pay, and it's always at the high end. So if you're talking a $15 or $20 mining fee, the 45 cents we're going to spend in fees to buy Bitcoin today is kind of moot. So again, Cash App is not a sponsor of the show, and they might not even be available where you're listening. In fact, they probably aren't if you're not in the United States. But if they are available to you and you aren't using them, there is a referral code in the show notes. And if you sign up for Cash App using that referral code, you'll get $5 free for just doing so. And the podcast will get $5 free as well. So you will get paid to help support the podcast. There are other services such as Strike and Fold, etc., that have referral links in the show notes. Again, none of those are sponsors. They're just services that I use, and anybody who uses those services get a friend and family referral code to where if you refer somebody to the service, you get something for free. So if you are looking for a way to stack sats and you want to use Strike, you want to use Cash App, or you want to use Fold, because the Fold card also lets you purchase Bitcoin now, please consider clicking on the link and using our referral code to do so. You'll help support the podcast, and you'll get something for free that you would not have gotten if you just go to their website and sign up. But I digress. I've got Cash App open. I do not have any money on Cash App, but I have my debit card linked to my Cash App account. And as I already mentioned, they will let me transfer money from my debit card to my Cash App immediately. So I'm already sent $20 and it's already on my Cash App. So then it's just as easy as tapping on Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we purchased another 45,733 sats. Bitcoin dropped a little bit in price while I've been talking. We bought at a price of $42,748 US dollars per Bitcoin. And that raises our total stack up to 8,678,892 sats. And it also increases our average cost basis. Again, not quite as much as it did last week, but we've increased our average purchase price by $75.41. But our cost basis is still $29,496.85. And that is a lot cheaper than what the current price of Bitcoin is. And one of these days, in the not too distant future, people are going to be looking saying, you got lucky. I can't believe you bought at an average of 29,000. Or you got lucky. I can't believe you only bought Bitcoin for $43,000. Or you got lucky. You only bought Bitcoin for $50,000. You bought Bitcoin before it was over $100,000. You didn't deserve that money. You just got lucky. Mark my words, they will say that. And remind yourself, steel your hands, that this isn't luck. When you invested your first $20 or whatever it was, and you didn't know much about Bitcoin, you didn't know whether it was going to go to zero or whether the hype was true. After a cycle or two, things start to feel normal. Your first halving cycle, watching the euphoric bull run, Bitcoin's going to go to the moon. People start talking about the super cycle. There aren't going to be any more cycles. Bitcoin's going to break 1 million. There's going to be institutional adoption. It's going to take over the world. And then you get that 80% pullback, and people actually start wondering if Bitcoin's really dead or not. And that repeats every 4 years. And I have no reason to believe it won't repeat again, but I also don't have a crystal ball, and I don't know what that euphoric blow off top is going to be. I've heard fair estimates that I would agree with, people speculating it's going to be anywhere between 150,000 or 300,000. There's people betting 1 million. Who knows? A lot of that has to do potentially with these ETFs. And even more importantly, with things like when the price of Bitcoin does set a new all-time high and people look at El Salvador and they see what Nayib Bukele did, and they look at Michael Saylor or MicroStrategy all of a sudden becoming one of the most valuable companies in the world and going, holy cow, they only sell $100 million of the software a year. How did they become the 10th most valuable company in the world? Well, they did it with Bitcoin. I want to do that too. I'm a small real estate company, or I make, alternators for cars or tractor parts, or I own a chain of grocery stores, and I want to be one day in the top 10 most valuable companies in the world. And the only way I can do that is by going full Michael Saylor. When that starts to happen, because there's only 21 million Bitcoin out there ever. There aren't even 21 million yet, but there will only ever be 21 million. And because they're not buying any of mine, and I know they're not buying any of yours, most Bitcoin hasn't moved. Most Bitcoin that's on exchanges is Bitcoin that's being sold by companies that are mining Bitcoin professionally and need to sell Bitcoin in order to pay their expenses. And in the halving, that supply of Bitcoin, the miner reward, gets cut in half. And it's going to get cut in half in perpetuity every 4 years until no more Bitcoin are issued. And as more and more people want to buy Bitcoin and there's less and less Bitcoin available, supply and demand tells you that, if you've got $10 million and you want to buy $10 million of the Bitcoin, but there's not $10 million worth of Bitcoin to buy, well, you're still buying $10 million of the Bitcoin. You're just getting a lot less Bitcoin for that 10 million. Anyway, I digress. I don't have a crystal ball, and this show isn't really about making price predictions. What this show is about is exploring dollar cost averaging, the news around Bitcoin, and hopefully helping plebs like you and me grow their stack so that when Bitcoin does become mainstream or more mainstream, when there's hyper Bitcoinization, and that we haven't missed out. Before I wrap this up, I want to reach out to you and ask you to help support the podcast, and not financially. If you want to send us a shout out, a Boostagram, by all means, that would be awesome. And we will read it on the next episode of the Bitcoin Bulletin podcast. But what I am specifically talking about is help feed that algorithm monster. Regardless of where you're listening, or if you're listening on multiple podcast platforms, please make sure you're subscribed to the podcast, or that you have that you rate or like the podcast, depending on which app you're using. But if you do rate or review the podcast, that helps feed the algorithm monster. If you listen on Spotify sometimes and on Apple Podcasts or Fountain other times, please do so on all three. Don't forget, don't leave one of them out, because that helps more people see the podcast. That helps us get information out to more people, to help orange pill more of the world. And the more plebs that join that join in on Bitcoin, the more plebs that join us in stacking Bitcoin, the better it is for all of us, and the better it is for humanity. Another way you can help feed that algorithm monster is by making sure you're following us on Twitter. On Twitter, we are at BTC Bulletin Pod. If you're not on Twitter, we have a Noster NPub on there, although I must confess that I haven't been on Noster as much as I had in the past, predominantly because I was having trouble with Snort. I was using Snort on my laptop to access Noster, I have Damus on my phone, but that's only for a personal Nostr account. So I've been using my personal Nostr account like crazy, and I've been neglecting the podcast Nostr feed. But if you're on Nostr, look us up. Our NPub is in the show notes as well. If you're super old-fashioned, you're not on Nostr or Twitter, and you just have email, you can go ahead and send us an email. That won't feed the algorithm monster, but I still want to hear from you. And our email is bitcoinbulletin@protonmail.com. If you're listening to this show in Europe, and if you're listening on Fountain, please send me a DM or comment on my post about this feed on Twitter, or send me an email, or contact me on Nostr and let me know, is the audio quality good, or are they still clipping my audio? If you are listening on Fountain and this show is just unbearable to listen to, please consider switching over to Spotify or Google Podcast or whatever your other backup may be. You can still listen on Podcasting 2.0 on Breeze, for example, because that seems to have fixed the problem. Here in the United States, I have not heard any issues related to Fountain, so I have no idea why. Maybe they're downloading, maybe Fountain's downloading from the RSS and caching in a different data center in Europe, or using different algorithms in Europe related to something else entirely. I could not tell you. But in the meantime, thank you so much for your support. Thank you for listening, and we will see you again next Wednesday and every Wednesday while we grow this stack together. And until that time, keep on stacking those sats, you sexy sat stackers.